All right, and we are live. Welcome back, everybody, to another edition of the Traders Mind Chat Show. Today, we have a very special guest, Marty Chargin, and I went back and I looked through our Twitter. We've been following each other on Twitter now for 8 years, and this is actually the first time that we're getting to chat live and in person. If you don't know who Marty is, Marty has over 50 years of trading and investing experience, Ken Slim style investor, in love with Crocs, and has a motto of never giving up. So let me bring Marty on board. Marty, welcome so much.
Hey, thanks for having me, Michael. I didn't know we were buddies for 8 years.
Yeah, just like going back and looking through some of the Twitter feeds. Yeah, like it's kind of nuts, like how we both got started.
Yeah, I love joking around on Twitter. There's some great people on there.
Yeah, absolutely. And you're one of them. You're one of my favorite followers for all those many years. So we've got a lot to talk about and a lot to cover. And everybody that's here that's joining us live, I want to thank you guys for being here with us live. If you have questions, just go ahead, type them into the chat, and we're going to do a Q&A portion as well, and live Q&A from you guys. Caleb already says that he has his Crocs on, so that's great. But so Marty, I wanted to ask you, when you are in a trade and you you get excited about a trade, and I've seen some of your prior work. Like one of the things that you like is excitement. You like when stocks move.
Yeah.
I'm curious how you reconcile excitement and wanting to sit with a trade and allowing the trade to work. Like, how have you learned to do that?
Well, it kind of depends on the market, right? I mean, we're all servants to the master of the market, right? And recently I bought NVIDIA. I don't know if you could pull up the NVIDIA chart. Where it had a nice run, then it pulled back, formed a base, and then I bought it. You got the daily up there, the weekly.
Switching over. Got it right over here. So there's the weekly. You want me to pull up the daily?
Daily chart, yeah, because it made a nice run. You could see that, NVIDIA is a great stock, real liquid. Yeah.
All right.
Yeah. By the way, I only like buying stocks that have good quality earnings and sales growth and institutional sponsorship and all those Ken Slim characteristics. But NVIDIA, you could see that it had a nice run there. And it pulled back into base, and I bought it there about 192 or so, right?
So 192. So that's going back somewhere in here.
A little further to your right there. Yeah, exactly. And then it ran up, right? So I'm going, okay, this thing went up to like 230 around there.
All right. So so you bought it in here, and you bought ahead of earnings?
Yeah, actually I did. Right in through here. Yeah. It's like an early entry point. And then it ran up, and instead of selling, like a swing trade, I held on to it because you always think they're going to go to the moon. I mean, this is a great long-term hold, but you can see how many times it pulls back to the 50 simple moving average. So usually it finds support there. But if it's not going to move, I just sold that for a swing trade. I didn't sell at the high. I didn't buy at the low or sell at the high. But it's just kind of like forming a base and coming back in. So I didn't want to hang out there and hold on to it. But you certainly could. I mean, if you want to hold this thing for the next 5 years, I think it's going to outperform the market easily. Interesting. But I don't want to wait around. See, so you're asking me about getting excited. I want it to move. It's not moving. I don't want to have it. So, yeah.
Fair enough.
Yeah.
I'm curious. Well, so you bought it ahead of earnings. Is that something that you typically do?
No, not really.
What made you decide
if the stock's moving through, a buy point, what I consider a buy point, I'll buy it. Buy a small position. Earnings can be a catalyst too. I mean, a stock like this, how often does it drop 10% on earnings,
Absolutely.
Yeah, it's a risk. I mean, being in the market's risky, right?
Yeah.
Yeah.
So what's going through your head, right? Because like a lot of people struggle with this. Like buying a stock ahead of earnings, it moves up, then it's moving against you, and it's moving against you before earnings. So what's going through your head right here, right? Because like obviously, like it ended up, you know, having a nice little run there after earnings. But what's going through your mind here that's allowing you to sit through this?
Actually, the reaction originally after earnings was it went down a little bit, and then it had a delayed reaction, then it took off. But to me, it's going through a buy point there, and it's finding support there. It's 50. So it's a stock I have a lot of conviction in. But right now with the market, in September, it's been really weak, and I just had to raise some cash, so I sold it as a swing trade.
Gotcha.
Yeah.
And what about it gave you that level of conviction?
Well,
Like what kind of things are you looking at? Like I know that you're looking at like you mentioned the fund ownership and things like that. Like what's making you think like like this is one that I've got conviction in?
Yeah, well, just go to the weekly chart and look at the lower left to upper right trajectory of the stock. Yeah, I mean, that stock's a big winner, right? So it's not going to go down just because I bought it. That thing is probably going to go higher and outperform the index in the next few years. So, but yeah, it was just a swing trade for me. But I really like the stock. Looks like it's coming in again today, huh?
A little bit.
Yeah.
A little bit. Kind of moving with the market, it seems.
Yeah. It's been really getting supported. It's 50 simple moving average. So looks like that's where institutions want to support it.
Yeah, just pull up the cues real quick just to see what they were doing, and similar action, it seems.
Yeah, it's a leader. I mean, one of the grade 8, right? Those are the ones that move the indexes, right? The FANGs and the Microsoft and the Tesla and the NVIDIA and Apple. Yeah.
Yes, indeed.
Yeah.
So when we're in an environment like this, right? Like if we go back and we're looking at the bulk of 2020, and just rather than use the cues, like, well, why not just bring up like NASDAQ or one of those? And if we're looking at 2020 and we're in this kind of a run here, like that's nice and smooth, and once you get in it, it's a little bit easier to sit through some of this. How does your mindset change when we're shifting from this to what we're in right now? Like, and how do you adapt?
Yeah, well, I still believe we're in a uptrend. A little correction within an uptrend. It did this last September. It did it in October. It came down about 3.5% below its 50 simple moving average last September and October. And then it did it again, when the growth stocks got hit February and March. It came down about 5.5% below its 50 simple moving average. Yeah, right there. And then it rallied back up, and then it came back down in May. If you go to May 11th or May 12th, that's the last time that we had a sell-off like we did yesterday. May 12th, it was down like 2.67%, something like that. Yeah. And that's after a little sharp, that's a sharp little sell-off there. Came down, had that nice little flush, and then look what happened afterwards. It's been up above the 50 for 4 months. So for it to come back down, and flush out yesterday, I mean, that's a nice gap there. It was down 2.2%. And right now it's about 1% below its 50. So, we're probably getting close to flushing everything out, I believe. Yeah. I mean,
So, well, I'm curious, right? Because like I have my own thoughts about some of this stuff, but I'm curious to hear your perspective. What would it take for you to think that the market is rolling over, similar to how we saw it in February of last year and March of last year, versus one of these little pullbacks? Because what happens so often is that you see a move like this, and people become very afraid,
Right.
and they'll dump.
Yeah, they get afraid and they sell, or people buy the dip. They're too aggressive to buy the dip. I like to wait for the bounce.
That's
But
true
if it
too.
goes below the 200, then it's adios muchachos. I mean, that's real trouble. But right now, it's only 1% below its 50, and you can see in the past, look, the past 14 months you have right there, it only trades below there for like a week or two at the most. So I expect a little turbulence, for the end of September, and then for it to trade sideways and regain, stabilize, and then trade higher. That's my expectation. Of course, the market's going to do whatever the heck it wants, right, Mike?
Yeah, of course. Yeah, it's like dancing with that 800-pound gorilla, right?
Yeah. Well, I mean, like I say, it's difficult. Trading's difficult, and you're taking risk, but there is no other alternative right now than the stock market. So I'm going to stay in there and stay. By the way, I'm only like 50% invested right now. I'm never, because of my age, I'm never fully invested. I don't want to take that much risk. So to me, to be fully invested is like 80 or 90%.
All right. So
Yeah.
so 80 or 90% is fully invested for you. And then, well, what's that other 10, 20%? Is it sitting in cash? It's sitting in bonds?
I can't lose all my money. Otherwise, I'll get divorced.
Is that one of the tips to a long, healthy marriage?
Yeah. Make money in the stock market and buy her nice gifts, right?
I'm still learning. Yeah. Well, we're 10 years now. We just made 10 years this year.
Congratulations. Right on.
Thank you.
Yeah.
Appreciate it.
Yeah. No, but you can see, it's been a long uptrend. A lot of people, they're in the camp that, it's due for a correction or, to roll over, because since April 6th of 2020, it's been a year and a half. So maybe it is time, not to buy the dip, and maybe it will roll over, but I'm going to stick with this market as long as it's still, this is still in character with what it's been doing for the last, 16 months or whatever. So yeah, I mean, until it changes character, and I don't think it has. So, the stocks go up or they go down, right? I mean, that's what happens.
Yeah, so, pretty much.
Yeah. I mean,
if you're looking at like volatility, right? Like volatility, it's not like the bars are about the same as they were for most of this move. Like over here, you've got a little bit more of a sharper pullback,
right?
But from what we're seeing over here, like it's very similar to this. So that's going back to what? To like April.
Yeah.
Back here.
Even going back to last September and last October, those are pretty sharp corrections. I think there's 13% correction right there on September 2nd. The NASDAQ was 11.6% above its 50 simple moving average, and that's way overheated. So it had to come in a little bit, and then it pulled back to 3.5% below. But you can see it regained, it stabilized, regained. Doesn't mean it's going to do it every time, though, right? I mean, but that's its character. That's its character, right?
Do you consider what stocks are doing as well?
Oh, of course.
And well, what are you seeing?
Just the leading stocks are the indicator to me. I mean, 80% of the stocks, growth stocks, are going to follow the NASDAQ or the index, right? But the leading stocks are going to you're going to gauge the health of the market by the leaders, right? And they're making new highs. Like Upstart's making a new high today. There's a lot of them that are doing really well. Cloudflare's near a new high.
Cloudflare. Well, what's the ticker? I should know that off the top of my head.
Net, NET, net.
Yes.
Yeah, I mean, if you look at those stocks, they look pretty healthy. They don't look like the index.
No, not at all.
They survived the sell-off in September really well. So when if the market regains its footing and starts an uptrend, then these stocks should be the leaders, theoretically. Yeah.
I'm curious too. Well, how do you determine what stock is a leader?
Performance.
Performance. All right.
Yeah. I mean, I was a coach. I coached for a long time. And if you're performing, you're in the game. If you're not performing, got to put you on the bench, right? You're on the
So
sideline.
performing for the year, performing over the past 6 months, 3 months,
3 months, I would say. Yeah, if you go on MarketSmith, there's a screen there that shows. If you go to a new screen and go to price, I think it's item number 32. It's a relative strength within the last 3 months. This is.
All right, so we'll just name this one Marty.
Okay.
All right, so go to price.
Go to price, yeah. And I think it's price. What is it? Price volume. Item number 32. Yeah.
Relative strength 3 months.
Yeah. So I just put like a 90 in there. If they're 90, 95, I mean, that's going to filter out a lot of stocks. Put in 95 right away.
Oh, I put it in the wrong spot. Let me fix that. So maximum is 90. No, we want a minimum of 90.
Minimum 95.
There we go. So you got 93 names in here.
Okay. Yeah, that narrows it down pretty fast, doesn't it?
Yeah, it sure does.
Yeah.
But minimum of 95.
Yeah, then you can go to volume. I think I forget the item number, around 11 or so, and you want a liquid stock, so it's got to trade over a certain amount of dollar volume, and then so you can screen out some more just by liquidity.
Mm-hmm.
Yeah.
Interesting. All right, so we're looking for stocks with relative strength.
Yeah.
And that's going to be your leaders list.
Yeah, I mean, those are the ones that are performing, right?
Interesting.
Yeah.
Very similar process, Marty. It's great that I always like when I'm talking to other knowledgeable people, and I'll get like new nuggets, but it's also nice like when there's certain things that line up, and it helps to confirm that you're on the right path.
Well, I mean, we've done okay, but yeah, I mean, buying the leaders, that's what I like. I like them strong stocks, right, that are liquid. So yeah. Yep.
All right, cool. I have another question for you.
Yeah.
So let me switch back to this. And so the question is, how do you avoid falling into the mindset of this stock, well, whatever it is that I have, this one's going to the moon, right? Because sometimes it's very easy to fall into that trap and fall in love with a stock that you have, especially when it's doing everything right.
Yeah.
So how do you avoid that? And then what do you do if you find yourself there?
Yeah, well, take a look at Upstart if you can bring that up, or Asana, ASAN.
Those are two good ones.
Yeah, it's
what do we look at?
It's a stock that I bought for my wife, Asana or Upstart, either one. Yeah. Okay. Upstart, yeah, I mean,
so whenever I hear the Upstart, I always think of Groucho Marx.
Oh, is that right? Well, this company was started by some Google executives, and I think it's like a reverse for startup, right? They left Google, and it's a startup, Upstart, I don't know, fintech company, but it's a leader. Look at that base, and it broke out. I mean, that's what you like to see, right? And right now,
yeah, absolutely.
I'm holding this one until it changes character, or until it does what NVIDIA does and starts pulling back to a moving average. But it's doing nothing wrong. It's a leader in the market. I can see it's up to 316 today. Yeah.
Yep.
It was, blew right through 300, no problem, huh?
And so far the volume is up 130%.
Okay, so like Livermore says, they go through those big numbers, they go to the next big number, right?
Yeah, exactly.
So that's my expectation. We're going to the moon. No, so, it's probably wise to take a little profit, take a little off the table with the market weakness. There's nothing wrong with taking 10, 20%, in swing trading and booking profits. I recommend that. So because you never know what the market's going to do.
Okay.
Yeah. So yeah, I Usually buy on fundamentals and technicals and sell on technicals, and this thing's doing nothing wrong. So, just kind of let it run for a little bit. But my expectation isn't going to the moon. I don't have any of those expectations. I've been around too long. I was asked a question, it's like, what advantages do younger traders have over old guys like me? And it's that they don't have that scar tissue from being, burned, many times over and over again. So they're like a little more fearless, a little more reckless, and they're going to put all their eggs in upstart basket and, make 100% in a short period of time. So good for them. I'm a little more cautious than that because of that scar tissue.
Interesting.
Yeah.
So let's build on that, because that's something that can blow them up too. So what would your advice be to a new trader to because if they go in all in on a trade like this, like market leader, they're starting out, maybe they've got, I don't know, like maybe 10 grand or something like that, just simple round number.
Yeah.
And that's something that can compound very quickly. And then all of a sudden, like you're up triple digits on the year.
Yeah.
How do you, what would your advice be for that person to avoid the blow up?
Just buy naked calls and go all in. Blow it all up. Penthouse or the outhouse, right?
Yeah, go big or go home.
Definitely. No, you got to take some off the table, now that you got a big gain there, right? Pocket some, go buy your girlfriend or your wife a nice gift.
Do you have a rule of thumb for when you would start to peel something off?
Is
it a certain percentage or an R multiple, or what is it?
Yeah, when that thing pulls back to its 10, it looks like it's being supported by its 10 EMA. Yeah, if it pulls underneath that, I would trade a little off. Yeah, definitely. I mean, it's doing nothing wrong now, so there's no reason to sell it. But if it starts coming in a little bit, because they can come in fast, they can come down like they go up. So, but this one looks real strong. It's doing nothing wrong. That you got big gains in it though. So yeah.
Curious. Well, what's your average holding period?
Oh, wow. That depends. Like I've held Crocs for more than a year now, I think. Yeah, around a year. Probably swing trading, a week or two. But I have stocks like Target and Bristol Myers. I don't even know why I bought that thing, just for the dividend, that I've held for long periods of time just for the dividend.
Okay.
Yeah, that I'll probably never collect on. Just my family will benefit from it. But yeah, no, I've had General Mills and Bristol Myers and Target for a long time. So, and some other dividend payers. So those are just different types. They're not trades. These things are a trade. I mean, I don't buy this for the dividend. I tell folks I bought NVIDIA for the dividend, and look what happened.
Oh my goodness!
Yeah, they pay a small dividend.
Do they?
Yeah, they pay a dividend. Yeah.
Well, what's the NVIDIA dividend doing?
Yeah.
Oh yeah,
I bought it for the dividend, and it went up 300%. Surprise!
Oh my goodness!
Yeah. It's a very small dividend. It's a very small dividend.
So here's a good question from Caleb. He was asking about the Fed speech tomorrow.
Yeah.
Does Fed speeches and things that the Fed does that factor into your analysis, decision making, or any of that? Or
yeah, of course it does. If you look around every time, every quarter, the Fed has these 2-day announcements. The market's a little jittery, and there's always selling around that event. So definitely the Fed is the straw that stirs the market's drink right now, because they've injected so much liquidity into the markets, right? And I think the market wants to continue to do that. They don't really like the taper talk, although I think it's pretty much expected there's going to be some tapering of the QE here pretty soon. But yeah, definitely, the Fed is definitely a consideration. I was around when Greenspan, we raised rates 16 or 17 times in a row and just completely crushed the market and crushed my portfolio as well. Mr. Greenspan.
I was in high school.
Is that right? Yeah.
Yeah.
Yeah, he was he was a hawk. So he wanted to crush that irrational exuberance, and he certainly did. So the Fed has a lot of power.
So got another question that I want to ask you here, and I think that it kind of fits into this this conversation pretty well. As far as like adding more positions to a portfolio, like, when would you go about adding more positions? Let's start with the swing trade, your swing trading account. When would you add more positions to that? Would you want to see progress in what you have already? Or if you're seeing like some other nice looking setups, would you add to them? Does it have something to do with performance, or does your sizing change?
Okay, a couple things there. The sizing with a portfolio, I like to have no more than 10 stocks, okay? And 10% would be a full position. A lot of times just a half a position, which is 5%, you know. Sometimes I'll have 8 stocks, you know, at 12%, or 10 stocks at 10%, but I don't like having too many stocks in sizing. I'm never more. I'm usually not more than 12% in one stock. Last year, Tesla, I think I got up to 25%. You know, and it made me a little nervous, right? I was doing well. You know, it's one news headline could crush your portfolio. So yeah, I don't like to get too aggressive that way. So standard would be 10 stocks at 10%. But when I'm adding like a swing trade, if I see a setup, and you have to have an expectation when you go into a trade. I think you do, an entry and an exit. So if you're buying like I don't know, if you can go to Zim recently, it had a little tight trading in its base here. Go to the Zim daily. This is one that I traded recently. In that base there, you can see the tight trading there right along the 50. Yeah, I had to sell it when it came back down. I had bought it, out of its IPO base. It ran up, then it came back down through the 50. I had to sell it. And then as it came back through the 50, it had a little tight trading in there right along the 50. And I bought it there, yeah, with the expectation of just, like a 10% swing trade, right? And it had earnings and had some good news, and it ran up. But I just sold it yesterday as it pulled back. It did. It beat my expectations by a wide margin. But I like to see that tight trading in the base there.
Let me ask you this: do you follow the 8-week hold rule?
No, because the market's gonna, the market's gonna dictate, your holds, right? I mean, if the market comes down, you're not going to hold on to it and lose. I have a rule not to let a winner turn into a loss. If you have a double-digit gain and it turns into a loss, shame on me. You shouldn't do that. Always sell, even if it's a 1% profit. The O'Neill turkey story, right? The turkey trap.
Yeah, one of my favorites.
Yeah, the turkey trap. Don't let those turkeys get away. Take something out of the trade. That one, though, that's one of my favorite IPOs from this year. There's 4 or 5 IPOs that I really like, and that's definitely one of them.
Yeah, well, what were some of the other ones?
Well, if you could go to, I like Doximity. They've had some insider buying. The CEO's been buying the stock. It just came below its, you see it was trading in a channel there. It was trading in a nice channel. Yeah, exactly. Higher highs, higher lows, and then it crashed through there. So had to get rid of it. Yeah, once it breaks trend, breaks character. These IPOs are volatile, but I do like that one. Longer term, I think it's going to be a good IPO. Broke out of that base there and started running. Looked real good. Now it's going to rest for a little bit.
Interesting.
I've got to promote the life cycle trade.
The life cycle trade.
Yeah, life cycle trade by Kathy and Eva and Eric. And I just went to Austin last week to see the Eric Clapton show, and on the airplane, I was reading it, and my wife's going, "What are you looking at here? All these charts." I said, "Yeah, this is my reference book for the IPOs. A lot of good IPOs this year. Too many IPOs. There's been over like 700, with 100 more in the pipeline, but I got it narrowed down to about 4 or 5 that I really like."
So we spoke about Doc. So what are some of the other ones that you like?
GLBE. I mean, these things are,
GLBE.
yeah, I mean, I don't know what the market cap is on these things, but they got like 10 billion market cap with a 500 million in sales. So they're kind of rich, but you can see the trajectory on, it's gotten a little bit ahead of itself. Kind of like some of those 2020 stocks from last year, got a little bit ahead of themselves. And now they have to prove their valuation, like a Zoom Video. Great company, great stock, just got a little bit ahead of itself. I'm sure the same thing will happen with these. They have had a big run up, and they're going to pull in a little bit, it looks like.
Yeah, from 23 up to 80 in what? How many months was that?
Yeah, not bad, huh? Yeah, not bad.
Yeah, small run.
Yeah, but those things are volatile. They're pretty dangerous when you're playing with those things.
Interesting. We had a question come in from Gustavo. He has a couple of questions. Gustavo says, wants to ask you about scanners. What scanners do you use to find plays? And do you have any particular time in the day to enter the positions? Setups.
A good question. I use MarketSmith, what you're using right there for a screen. It's got a lot of screen capability. And there's some real easy things. If you go up to that, I also use FinViz as well for a screener, but this is more effective here. If you go up to that orange tab at the top.
The orange tab at the top.
Yeah, the orange tab says, I forget, I can't see what it says. They're like open new ideas or something. Orange tab up there. Yeah, that orange tab, the right upper corner.
Oh, the right upper corner.
Yeah, the orange tab up top. Yeah, that one right there. Yeah, you click on the weekly there. Click on weekly, and it'll give you like O'Neill. You go to the O'Neill charts down there. It's like 160. Those are stocks that are near their highs, so you can view the results of those. That's just an easy way. What'd you get? 160 stocks or something? Yeah.
Yep.
Yeah. Ooh, Agilent, one of my faves. Yeah. So that's an easy way to screen for just stocks that are near their highs, right?
Yeah, that's a good way to find the leaders.
Yeah, it's kind of, the leaders. I mean, they could be hit their high and be coming down. They're near their high and they're selling off, or they could be on their ascent, right? But that's the style, right? To buy at the highs, right? They make new highs. Yeah. Yeah, it's a real quick screen. But I usually go through the tabs on the left in a new screen and put in my own criteria. What was the rest of his question? Oh, scanners. Yeah, MarketSmith and FinViz. I don't have any time in the day to enter positions. I don't like buying in the morning, especially on gap ups. But if a stock is going through its buy zone, you buy it, no matter what time of day it is. It's at the open or at the close or in the middle. If it's going through its buy area, you need to buy it, especially if it's got volume and momentum.
Now, are you waiting for an alert to go off and then you'll check to see if it's got the volume and the other criteria, or do you set a buy stop and let it do its thing?
No. If you go up to the little bell there, you can set alerts on MarketSmith. So I could be on the golf course and all these little bells are going off, right?
I'm just catching you there, like ready to swing the club, and then all of a sudden your phone is going
exactly. I'm in my backswing, and I got buy Crocs at 150. I put in certain buy points in there, and it'll alert me. Some days the thing's going off like crazy, and other days it's just real quiet. But yeah, that's how I set my alerts there. There's lots of different ways. So that's what I set alerts. He asked about favorite setups. There's a lot of ways to skin a cat in the market, right? I mean, the traditional O'Neill way is buy the standard buy point at 10 cents above the standard buy point. And I know that there's been a lot of selling into these breakouts, but there's also a lot of ways to buy, like on the pullback to the 50. We just showed you NVIDIA how often it comes back to the 50. You go to Fortinet, FTNT.
Yeah,
FTNT. Yeah, here's a stock that is not base. It's not going to give you a chance to get in, right? I mean, I was looking at it at 200 going, I should buy it at 200. No, it's a little extended. So the only way to buy this thing is when it pulls back to its 50, which it did yesterday.
Interesting.
Yeah. I mean, I was going to buy it at 200 and I thought, it's extended. Now it's at 300. It's going like, well, I just lost 50% because I didn't want to buy the thing extended. And so, I mean, you can see it's just been riding its moving averages higher. Cybersecurity has been real strong this year.
So would you buy that move right there?
Yeah, I think you got to buy that. I mean, how many times this year has it given you that opportunity at the 50? I mean, this time, but last month or the month before, it came down, didn't even come down to its 50. So if you want to buy that stock, you have to buy it there. But there's also, lots of other ways to buy. If you go to CrowdStrike, it's in the same cybersecurity crowd.
Yep.
Yeah, see that thing at 227 there was the buy. And then it took off. Then it came back through it, right? Came back through the 50. Yeah, and it found support there, right?
Yep.
Yeah. So you could buy it. Yeah. Go ahead, Michael.
Yeah, it pays to look to the left.
Yeah, exactly. Yep.
See what's going on.
That's another stock I have a lot of conviction with. Good leadership, and they're just signing more contracts, and I think businesses are putting more money in their budgets for cybersecurity because they can't afford to get hacked, and they have a really good product. So yeah, the 227, it came back through its 50 though, because I bought it at 227. It ran up to like 270 something, and then it came back through the 50. So I sold it as it came back through the 50, and it found support, at that prior pivot area, 227. But I didn't buy it there. It got it got announced that it's going into the S&P 500, and it gapped up, and then I had to pay more for it, and then went up to like 280. So that was a nice quick trade. But right here, it's back to its 50 again, right? So we'll see if it finds support there.
So were you buying on this day here?
Yes.
When it gapped up?
Yeah, when it came back through the 50, but it gapped up pretty strong. I'm thinking like $15 or so. Yeah. So
and then what prompted you to sell?
What's that?
What prompted you to sell?
It came back through the 21, right?
Yeah.
Yeah, it's just total weakness. It was just a trade. It was just a trade because I knew I paid too much for it.
Interesting.
Yeah, that's the way you get shaken out. You say weak hands get shaken out. The only reason why I'm a weak hand is because of you didn't buy properly, right? If you buy properly, then you're probably not going to get shaken out. When you buy extended chasing like that through a moving average, you're more likely to get shaken out when it just takes a normal retracement. Because you can't let a profit turn into a loss. One of my rules, right?
Yeah, no, that's a very important rule too.
Yeah.
Roughly how many swing trades do you average on a year?
Ooh, a year? How about a week? A couple a week. I'd say a few a week. So over the course of a year, 100, a couple hundred maybe. Yeah.
Right.
I mean, because if you see something that you like, it's just you got to buy it, right? I mean, I do anyway. Yeah. If you go to AMD, AMD is another one that I screwed up with because I like to buy them early, in the base. And the thought process here, I think its previous high, I bought it at 89.20 there. It made a high of 89.20. And there was not a lot of overhead resistance because the previous high was like 99. So that's why I picked it. Yeah, a little bit of overhead resistance there. Yeah. So I know a lot of O'Neill buyers are going to wait to that new high at 99 something, which is fine, right? They still made 20% in a very short period of time. But I bought early, and then it came down below it, and I got shaken out. And then I had to buy it back again as it moved through. And that was right before earnings too, I believe. Yeah. Just like NVIDIA.
Earnings was, yeah, right there.
Yeah.
Yeah, very similar.
Yeah. And now they're kind of doing the same thing, kind of bulling back to their 50 here. Another stock I have a lot of conviction with, AMD, great leadership. They're going to do well.
How important would you say is your intuition or gut feel on a trade?
Yeah, Mike Webster, you know Mike Webster?
Yeah, absolutely. He was on the show last year.
Yeah, he's a brilliant guy. I love him. Went to the show with him. And anyway, we talk about that, it being an art. It's an art, not a science, right? Mm-hmm. So you have to have some intuition, right? I mean, otherwise any kid with a calculator could make money. Mm. So you have to have a lot of feel. And it's just from looking at a lot of charts over time. Yeah, a lot of chart reading over time. Your eye gets trained. That's one thing I'd say to a new investor is just look at charts every day, all the time.
Interesting. Was there a point where you started to see a shift for yourself in your trading, when you started to pick up on more things intuitively?
When I first really, when the E-Trade brokerage got rolling, I used to trade with these guys from Vietnam. When the Vietnam War ended, the boat people came over to California, and I was a teacher, and I met up with some of these guys, and they were working in the the maintenance and then the sports department, and I would teach them English because I was a teacher, and they would teach me how to trade in the market, and they were just day traders. They'd see that first 5-minute bar and they would jump on it and trade, and half hour later they'd sell at 2 or 3%. We were taking that out like crazy, and that's how I really got into Momo stocks, right? Day trading for years, 95 through 2000 until we crashed and burned. But for a teacher, we were trading eBay and Cisco and Qualcomm, some of the best stocks. I knew about IBD, so I knew these were quality stocks with the CanSlim characteristics, but we were still day trading them like wild banshees. And for a teacher to make $100 or $200 a day, or for somebody working in maintenance, that's great supplemental income, right? But at 2000, at the crash, I looked at Qualcomm and I looked at Cisco and I looked at eBay and go, these are some of the greatest stocks of their era, right? All you had to do was buy and hold on to them, and you could have made 2,000%. Instead, I'm stuck with $200 a day. That's when I started getting into more long-term holding and investing in companies, instead of the day trading. Yeah, I don't day trade anymore, but they were the ones that really got me into it, and we had a lot of fun. It was great. I'd teach in the morning, I'd coach in the afternoon, and I'd go to school at night. We'd day trade. I'd go into the PE office and they'd be in there day trading. It was a lot of fun. It was a lot of fun just getting up. Every day was something new. It was really exciting. So yeah, but I can't do that anymore. I don't have. It's not good for my blood pressure. Yeah, it's too much stress and too much thinking, too much stress. Yeah. So, but I know a lot of people make a lot of money doing day trading, so God bless them.
Gustavo had a follow-up. He wanted to ask, when waiting for volume, is there any time frame that you like to see intraday?
Oh, pull up AFRM if you can, Michael. Affirm.
Yeah.
Because it gapped up twice recently. Yeah. And if you go to just a 5-minute, well, I guess you can't do it on MarketSmith, but if you go to that first,
what?
Yeah, where it gapped up.
What? Here we go.
Oh, you're going to
trading view of the rescue.
There you go. If you go back to that day where it gapped up on the Amazon news, I mean, it had over 1,000% of the daily volume and a lot, like the gap up early, right?
Yeah.
The volume coming in, yeah.
Yeah, I just have this indicator down here for volume. Well, when it turns blue, that means that it's above its
daily volume.
Average.
Yeah. Massive volume coming in. And then when it had the earnings report, I don't know, a week or two later, it did the same thing, not with quite as much volume, but a lot of volume coming in there. It just institutional footprints is the volume, I've had that discussion too with people about the volume isn't what it used to be because, first of all, the prices of the stocks are higher, right? I mean, you got Amazon and Google over a couple thousand. And a lot of people are playing with options, they hedge with options and it's, so they're playing the stocks with options. So the volume in the stock isn't as great. But when you see something like a firm and the big volume like that, I mean, that's obvious. Yeah, I think Palo Alto Networks had it as well. When they announced earnings, it had a huge gap out of a cup. Cup base.
Earnings was back here.
Yeah, and that it broke out of a base, and it's just been trading nicely ever since. Big volume. So those are institutional footprints. You got to follow the institutions because they're the ones with the money, right?
Yeah, absolutely.
I want to follow them.
And it's not like there's a difference between above average volume like it had on this day and then skyscraper like this.
Yeah, like a 800 or 900%, of the daily run rate. Yeah, so those are institutions buying. Probably a little short covering too.
Yeah.
They're taking their beating.
That'll send a stock up, definitely.
Yeah, there's another one. Atlassian Team is doing really well too. It gapped up.
Team.
It gapped up out of a base with volume, and it's just following through, being supported.
Right back here.
So breakouts still work. I still like to be a breakout trader, but I think I've had more success with reversals and looking at those engulfing candles.
Do you use candles or
go to Roku. Go to Roku because it had a beautiful cup and handle with everybody was oogling it one weekend, and then it ran up to like $4.95. That little cup, and then it made that bearish engulfing candle, and that was change of direction. And it was just see you later. That thing has been really weak ever since. I mean, it had a bullish engulfing and it had a bearish one. It hit 495 intraday and then reversed and made a big candle. Let me see if I can. Roku. I have it on here somewhere.
That was a pretty rough day for it.
July 27th. July 27th, And so it's been a change of direction ever since, come straight down. But that's, if you look at the history of the stock, that's kind of what it does. It sells off and then spikes and sells off and spikes. But it, it had a phenomenal run in 2020, so it's just, digesting gains from last year.
Let's see. Well, what else do we got? Here's a good question that I wanted to get your take on. You mentioned that you had a couple of different accounts. I'm curious, what's the purpose of each of the accounts? Does each account have a specific goal, a specific earmark? And
oh boy, I don't want to get too verbose here, but I was working and putting money into my 401k, right? As people do, right? Over time. And then after 20 years, I was look at the performance, and the performance was not good. And I'm not going to give away the company's name, but they mismanaged my account. So I took that money from the 401k for 20 years and rolled it into an IRA. I have a traditional IRA and a Roth IRA, right? Just for tax purposes. So there's two accounts there that I would consider like, untouchable, that I don't really want to mess with, right?
Right.
And you can only put $7,000 anyway into an IRA per year. I think it's something like that. It's not much.
For a Roth.
Roth is a little different, but so I have those two retirement accounts, and I have a trading account with E-Trade.
Okay.
which is more, more aggressive, and that's more of my swing trade account. So that the purpose of it is because I had to manage my own money because the professionals mismanaged it, is basically what it comes down to. Yeah. And if you know what you're doing, you can do that. If you don't, you can really, hurt yourself. But yeah, after 20 years, I expected to be at a certain level, and I should have been more on top of it. But I've been doing well since I managed my own money. That's all that matters.
That was actually the first lesson that I learned when I got my first taste of the market.
Yeah.
My first taste of the market was in 1999, and back then I just thought that you have some money, you put it in the market, and then more magically pops out the other end. And so I just walk into my local bank. I didn't even know how to buy a stock. I just asked them, like, hey, like I want to buy some stocks, and they're like, hey, you don't want that. What you want is this, and they show me their mutual funds. And so I ended up buying some of the mutual funds, and I'm checking it frequently. Within 3-6 months, this thing is up like maybe about 10-15%, and I'm thinking that I'm a genius for having done it, not realizing anything about NASDAQ or S&P, or that individual stocks were up several 100%. I'm happy with my 15, and then I'm in college, and I stopped looking at it because the subjects are getting tougher, but it's like, you know what, they're handling it, professionals and everything. And then I graduated in 2002, and I think that I'm going to take that money and buy a car. And I didn't have the money that I started with. It was down maybe about 20% from what I started with. And it's like, what the hell?
You're riding a bicycle, not a car.
Yeah. I'm screaming out the window, yabba dabba do, because that's all I had was foot power.
What was the thing? It was everybody's 401k got cut into a 201k. They got cut in half.
I never heard that one. That's great.
They got cut in half. Yeah, those are tough times, man. Those are tough times.
Yeah, indeed.
Yeah. And people want to compare the 2000 with today, because 2000, I mean, you didn't have to know anything. You just buy any .com and it's going to go up 100% in 2 weeks, But today, these companies have real earnings. You're looking at Google and Facebook and Apple. I mean, they have great balance sheets, and Amazon, where they're earning like $100 in earnings or 200, whatever. They have real earnings, these companies, and sales. So back then it was totally different. I don't get the correlation there that there might be a bubble with the Fed if the Fed starts taking the money out, but not with earnings. There's these companies have solid earnings. As you know, if you've ever bought an iPhone or an iPad, or you're into the Apple ecosystem, you get the bill every month for their storage and music. Yeah, there you go. Yeah, I mean, so if you're tied into the system, that's another thing, Peter Lynch, the buy what you know, type of thing. Yeah, that's kind of what got me into Crocs. I mean, I've lost money on Crocs a long time ago, but I like their products. I wear their shoes and stuff. So, are
they comfortable?
Yeah, they're comfortable. You got to buy the Athens sandals, man. These are the best.
Oh my God. I didn't even know that they made anything other than the ones that, the typical ones that wrap around the back.
Yeah,
that everybody knows that. I didn't know that they've got other things.
No, they make nice sandals. But anyway, I write a check to Waste Management every month to pick up the garbage, So I bought some Waste Management stock for my retirement account. Pays a little dividend, just stuff like that. Notice what's going on around you. The other day, I ran into a nurse at the store. She had figs on. She was wearing Crocs, and she had a Michael Kors bag. Those are three great companies, right? So she said she loved the figs, and they're really comfortable, and that they're expensive, and that the hospital didn't want to pay for them, so she bought them on her own. And she said everybody in the that industry, the nursing industry, they all like to wear Crocs. The doctors, and they're comfortable on the hard floor there at the hospital. So.
I worked in healthcare for many, many years, and that's where I first saw people wearing those, especially the surgeons.
Oh, is that right? Yeah, they're comfortable. I mean, when you're on your feet all day, right? You need something comfortable.
Yeah, absolutely.
Yeah.
So I'm curious too, like, do you swing trade in the retirement account or
Um,
in a regular account? Or have you ever considered uh, swing trading in an IRA versus a regular account because one is tax protected and one isn't?
yeah, I try to stick the swing trading to my brokerage account, but I cannot tell lies. Sometimes if I don't have any cash available and I see a good setup, I will do that trade,
Mhm.
because it's there for me, right? It's right for the take, and I've got to take advantage of this trade. So sometimes it works, sometimes it doesn't. But yeah, I do. Sometimes I will trade in a retirement account. Can you
Uh,
pull up Dash? I'm looking at
yeah,
Dash here. I'm looking
yeah.
at
Let's take a
Dash.
look at
I just want to point out because I used this for a swing trade recently. It was tight trading within its base, and it was just like a 10% trade here.
what
Yeah, right in here,
in
right
here.
there. Yeah, right on your right side here. Just recently, the last few weeks. Yeah, the
So
last
so you're
few
looking
weeks,
at
right in
this.
there. Yeah, yeah, the tight trading in there.
I looked at
Yeah,
her eye goes to the same spot.
yeah. And then so yeah, tight trading within that little base there. That's something that I look for. Definitely, it's similar to Zim. That thing's got a nice little cup, nice consolidation for a long time, and yeah, it gapped up. What is it? 219 today, 220. Yeah, I think I sold about, I don't know, 212 or something. I'd already parted it out, but yeah, that was a nice little swing trade. That's what I look for. Um, it's
Do you,
pulling back to a moving average, and it's tightening up.
do you keep a
So,
stop in the market?
do I what?
Do you keep a stop, like a resting stop?
No, I don't use stops. When you're looking at the market all the time, I mean, you know, I know people like to use them as like a insurance, a safety valve. But if you're looking at the market all the time, now when I was traveling, yeah, you might want to use stops when you're traveling because you don't have internet access. But yeah, typically no, don't use stops.
Interesting.
But that was a good one. That was a good one.
All
I
right.
think Williams Sonoma had it as well. If I could look here, yeah, Williams Sonoma tight trading in that base in August, and then it gapped up. Yeah, see that tight trading
Yep.
there in that base? Yeah, right there. Yeah, yeah, yeah. I like tight trading. I don't like the volatile stuff, the big bars. Yeah. So that's just a quick little trade, right?
Yeah, a
Yeah,
great move here.
yeah,
So when you see a bar like this where it blasts up higher, massive volume, and then
yeah,
it has a weak close like that,
yeah, yeah.
well, are you taking action or
Yeah,
are
what
you
was
holding or
what was
what are
the
you doing?
date? Yeah, I got to sell that. You got to sell while the ducks are quacking, as Scott St. Clair likes to say. Yeah, I mean, take profits because, like you say, it's just a trade, right? I'm not going to hold Williams Sonoma for life. That's a nice, quick little 10% trade or something. So, yeah, Michael, if you go back to the Nasdaq, I wanted to make a point here.
Yeah.
Of, you go to the Nasdaq on MarketSmith, and yesterday we had the biggest um, gap down, or the worst day since May 12th, right?
Uh,
We had
yeah.
the yeah since May 12th. So now if you go to a stock like Shopify, and you look at the Shopify on May 11th, it has a bullish engulfing candle on May 11th, the day before that big huge sell off.
Yep.
Yeah. And so the next day, the market sold off, but it just kind of went sideways, right? Then a couple
Hmm.
days later, that thing really took off. Yeah. And then if you look
That's
at,
a great point.
yeah, and if you look at CrowdStrike, you'll see the same thing, and Roku and Net. Yeah, go to Crowd. I think it had a bullish engulfing on May 11th. And then when the market sold off hard, it just went sideways.
Mm.
When the market regained its footing, these guys led the way back up. Net was the same way. Roku, yeah, a lot of those stocks, C Limited. Yeah, they had that bullish engulfing, and it didn't work right away. Like the next day, I know the strap people call them a 3, and there's always, another name for them. I just call them bullish engulfing because typically it's changing direction and they're bullish, right? So yesterday we had that big sell-off, and DocuSign recently made one of those. If you go to DocuSign, I think it was last Wednesday, it had that bullish engulfing candle, and now it's just kind of trading sideways as the market, gaps down. So I bought that DocuSign, about 273 there. So I'm probably a little underwater, but I don't care. I think if the market gains its footing, DocuSign's it's a good stock, and it's pulled back quite a bit. So we'll see how that one works out. But I think if the market gains its footing and starts, rallying here in October, November, I think DocuSign could make new highs. So that's my expectation for buying that one.
How far would you allow it to pull back?
5%, because it went down to 263 yesterday. It went down to 263. Right?
Yesterday?
Yeah, it went down to 263. So I was down $10, but
yeah,
I'm on the golf course and I got the alert, but I didn't want to deal with it. So my decisions yesterday were like 8-iron or 9-iron. I didn't want to buy or sell any stock. So I'm gonna hang on that one. If it goes down 5%, I'll cut it loose. But I think if the market stabilizes and regains its footing and starts to rally, I think this one could make new highs. So that's my expectation. If it blows up, it blows up. I'll just sell it. No big deal.
Marty, time flies when you're having fun. Well, it's already 12 o'clock here. I want to be sensitive to your time too. There's a couple of other questions here, but
go ahead.
All right. Question from Tony. Tony says, Marty, in relation to IPOs and your study of the great book, The Life Cycle Trade, do you ever consider a new IPO from the start?
Of course. I just brought up what it was. They say, and I think in the book, Kathy and them say don't buy in the first day, right? But if you go look at GLBE or even Zim, some of those, they didn't take long for them to get started, right?
Yeah. What, 2 days?
Yeah. What do they call those rocket ships, But, typically no, because they undercut their IPO price. A great percentage of them, maybe 80 or even 90% or even more. They cut their price. So it's very risky to buy the first day. Take a look at Snap. Take a look at Snap. If you bought that thing from the start, you're going to have to go to the monthly, I think. Yeah, there you go. That's like 3 years, right?
Yeah, that's a little bit of a consolidation.
Yeah. So it broke out last October. It broke out of that 3-year base, and it gapped up there, and it's kind of holding its own there around 70, 75 area. But yeah, see, that's what could happen if you buy the first day or the first week. It's got to go through the institutional due diligence phase, right? And then turbulent zone, and then now it's at its institutional advanced phase. So, see, you learn something when you read. These got to be on audiobook, right?
Is it on audiobook?
I bought this one, but yeah, I usually read audiobooks, because I could listen to them when I'm driving around, and I don't know. I think I comprehend things better when I listen. Everybody learns differently, right? Yeah, visual learners, audio learners, so I usually listen to my books.
Likewise.
Yeah. So so to answer his question, be careful because you might be sitting in a stock for 3 years if you're holding on. I don't want to wait 3 years.
Yeah, no, me neither.
Yeah.
I've got a question here. What advice would you give someone that's just starting out and is enthusiastic about their trading journey?
Never
give them? What advice should they avoid? Because there's a lot of advice out there too that
don't listen to old guys like me. Never give up, for one. Oh wow, advice. Well, I got to start right here. Is read the O'Neill book, right? We're all, standing on the shoulders of the great Bill O'Neill, right? I mean, he's the one person who made a bunch of money in the stock market and was able to teach a system. I don't know of any other wealthy person who was a good enough teacher or was able to devise a system and teach it to the average Joe like me, like William O'Neill. So shout out to Bill O'Neill and Investors Business Daily. So read the book. That's the Bible for me. And, it's got its principles, and, from there you can make your own style, create your own style, because you're going to learn what works and what doesn't work for you. Don't be afraid to make mistakes. The thing is, when you lose small. That's one thing that I was stubborn at first, because I was always right. I bought a stock, I had to be right, and the market's telling me I'm not right, and I held on to it. 10% loss turned into a 50% loss. And when you lose 50%, you need to gain 100% just to get back to even. So keep your losses small, because it's hard to find two baggers. They're hard to find. So yeah, keep your losses small. Stay enthusiastic. You can do it. If I can do it, you can do it. The thing that you should avoid, though, is definitely avoid big losses. Avoid big losses. Read charts. Learn how to read a chart, because you buy on technicals. Anybody can see the fundamentals of a company, but you want to buy on the fundamentals and the technicals, the proper buy point. Otherwise, you're going to get shaken out during a normal retracement. So learn where those proper buy points are, so you get a safe buy point. And I would avoid small losses, and I would read O'Neill's book, and I would stay enthusiastic and never give up. How about that?
Amazing. I think that's great. Do you have time for one more?
Hey, I got all the time in the world.
Perfect. One more question here, for a little bit more for the advanced people in the audience. I'm curious to hear what winning trade that you had in recent memory did you learn something significant from, or maybe that reminded you of a good lesson, and what was the lesson?
So if you could pull up Crocs for a minute there.
Oh yeah,
Pull up the chart. If you could pull up, I think the daily will have it. It gapped up about at 45. I want to say maybe last October earnings. You go all the way back to like 45. There, I got it right here. Let me see here. Oh, wow.
Look at December.
Yeah, 45. It gapped up. Yeah, last October 1st, Michael.
So last October. So
yeah,
this is October 2020.
Yeah, October 1, 2020. It gapped up.
That's a pretty big move.
Yeah, at $45, I want to say.
Yep.
So I bought it there, and I bought a big chunk there, and I've been adding like just about every time it gaps up on earnings, smaller percentage. So, but it came down to its 50. I want to say before the April earnings, it came down to its 50, right?
Before April, so
I think before April, it came and then traded below the 50. I want to say April, maybe. Yeah, there you go.
Yeah, like somewhere back here. Go back further. Let's take a look.
April of 2021. Yeah, I want to recall that. And it anyway, I was going to sell it. I was going to sell it and just take it off. And then I remember that Mike always talks about looking at the weekly charts, and on the weekly chart, it still looked fine, okay. So looking at weekly charts will help you with staying in a stock. And so I held on to it. Then it gapped up, and I actually bought a little more after that earnings in April. I want to say April 27th, something like that.
Are we talking over here? April 21?
April, yeah, April 21. Yeah, it closed below its 50 on a daily, right?
So this is April 2021.
Yeah.
So April.
Yeah, it closed below, and I was going to sell it, but I just the point is, I referred to the weekly chart. So, I just got to remind myself to look at the weekly charts. Don't be so impulsive. The stock was fine, and then it gapped up, and then I bought it like the next week, added to the position, smaller adds all the way, because your cost basis is going up, right? As you add, so you want to add smaller as you go up. Your biggest buy should be your first buy, and you add smaller increments as you go up, because you're paying more and you're adding to your cost basis. But yeah, look at the weekly charts, and that's something that Arusha and Mike Webster always talk about. He talks about a lot of things. Be flexible, keep an open mind. Yeah, and look at weekly charts.
Fantastic.
Yeah.
Marty, well, what are some of the best spots for people to get a hold of you?
Twitter is one area. I love bantering with people on Twitter, joking around. I have a site, mcstockcharts.com. It's a free trial for 14 days. Come check us out. Just look through some of the archives. I have a thesis of, this bull market's going to last for a little while longer. I believe it's still in a window where we're going to have a appreciation for a couple more years. Yeah, there you go. That's me. I didn't design that. I couldn't do that if I tried. Some gentleman did that for me. So I just provide the content. Yeah, it's been fun, and it helps me. It helps me to stay focused and keep trading. And a lot of people there are really smart, have really good questions, and I think they've been doing pretty well during the sell-off in September. We've been doing really well, just sticking with the leaders. I have a conviction list of technology stocks of 25 stocks, and then I have a list of 20 non-tech stocks. But the tech stocks have been outperforming recently. When you got stocks like Upstart and Asana and Fortinet, they've been doing pretty well. Yeah, and Cloudflare. I mean, I don't want to give it all away. You can go there and look through it. It's free. So yeah, give us a look and check it out. And yeah, we've been doing pretty well. Everybody knows there. 5%. If I'm down 5%, get out. We can always buy it back, right? Get out.
Yeah, absolutely. Keep those losers short, as small as possible.
Yeah, keep the losses small. Absolutely.
Any other last minute advice?
Oh, be kind, be grateful. Live every day is. Count your blessings. My brother-in-law just passed away this morning, so it was kind of a heavy day for us around here. Goodness. Yeah, he got COVID going to New York, and he's been on a ventilator for 2 weeks. So my wife's going to fly out there tomorrow morning, and yeah, he's got 2 kids, 4 years old and 8 years old. So it's been pretty tough. He was a great guy. Andy Morris, he went to school with Steve Jobs. He was in Steve Jobs' class at Homestead High School. Great high school. Go Mustangs. But Andy was a great guy, and we'll miss him. But yeah, every day, count your blessings, right? Hug your children, hug your family. Don't take anything for granted. Be kind, do things for others. You'll feel better about yourself. Sometimes you get into self-pity, and you do something for others, you feel better about yourself. That's one of the secrets I had of, I was a principal at a Catholic school. We always did things for others. We'd always go to the local, Sacred Heart or the loaves and fishes, to feed people and clothe them and stuff. So you felt better after you left, that you helped somebody. So that's something that stayed with me for a long time. It's ingrained in me. So yeah, do something for others. It will make you feel better about yourself.
Great advice, Marty.
Yeah.
Thank you so much for taking the time to be here. I really appreciate it, and lots of great questions from everybody. Marty, it's been wonderful.
Thanks for having me. Now I got a tea time to go to, right?
There you go.
Michael, it was nice chatting with you. Even though we've been friends on Twitter for 8 years, I finally get to meet you. It's been a pleasure. Thanks for having me.
Absolutely. Hopefully we can do this again sometime.
Anytime.
All right.
The market's going to start rallying here in October, November, and people are going to be making money like crazy. So you can have me back on when we'll have lots of money, right?
There you go. Just have it stacked up in the background.
Lots of winners. We're all geniuses in a bull market, right?
Woohoo! All right.
All
Have a
right.
good one, Marty.
Take care.
Bye, everybody.
Bye.